Have a listen to this. Have a listen to this. Now, that kind of talk this week dragged Australia's share market to a two-year low. There are, of course, complex reasons for that.
He was the big spender. The big spender.
Doing the grocery shopping can take a huge chunk out of the family budget.
And that's finance.
Hello and welcome to Comedian versus Economist. We demystify the world of money and help you get a handle on the bigger picture. My name's Adam and we're joined as always by my little older brother and real-life economist, Thomas. Hi, Thomas.
Yeah, g'day, Adam. How you going?
Doing very well, thank you. Big shout out to all the dads out there. It was Father's Day yesterday as we record here on a Monday night. Did you have a good Father's Day, Tom?
I did. I had a good sleep in and I took the kids out. I just stayed
That's
in
not
bed.
Father's Day?
Yeah.
You don't get to sleep in on Father's Day.
Yeah, they made me breakfast and a very cold coffee.
Oh, nice.
First thing in the morning.
Yeah.
Yeah, and then let me go back to bed, which I was best Father's Day ever.
Yeah, good. I took mine to the salvage yard. Anna asked me what I wanted to do on Father's Day, and I said I want to go to the salvage yard. I love going. It's my favourite. It's my happy place. The salvage yard. They have just stuff from everywhere, and the kids have a good time too. They just find junk and play with it. It's probably quite dangerous, but hey, everyone's having fun. All right, massive show coming up. Zombie companies are on the march. It's no use hiding in the old abandoned warehouse down by the docks. That's exactly the kind of asset a zombie company would own. We'll find out what you can do. Have NFTs run their course? Maybe I'm going to create an NFT to celebrate the end of NFTs as a hedge. And Japan wants to boost its economy by getting more people to drink alcohol. Opponents say this is not the solution to the baby formula shortage. But first, last week we climbed Mount Unemployment and reached the Jobs and Skills Summit. Thomas, what did we learn?
We had the much hyped, much covered Jobs and Skills Summit last week in Canberra. The Labor government pulled that one together. A little bit of a vintage move. So when
we're going for a classic summit.
Yeah. Yeah. Well, no, like one of the glory achievements of the Labor Party was the Accord, which came in after the Hawke election, and he got the unions together and got the Accord up with a summit of a kind there. So I think they're trying to hark back to those glory days.
What was the Accord? Is that something to do with jobs?
Well, yeah, wages. It was an agreement for the unions to sort of put a handbrake on wages for a bit to sort of help get inflation under control. Right. That was the theme of the party. No big achievements. Nothing to.
Did anyone go
up.
Fancy dressed just as a? Just misinterpreted the fact that it had a theme of jobs and skills.
Just rocking on
Someone
80s
rocked
wear.
up dressed as a hammer. Oh, this is awkward. Right. Well, what did it achieve? Anything?
Not much. I don't think. I mean,
it's disappointing.
Yeah. I mean, the thing with these summits is like all sort of these international conferences, like the G7, G20. It's all decided beforehand, and then you kind of just pretend to talk about it on the day. That seems to be the case with this one as well. The conclusions of the session came out at 5 o'clock on the Friday, just after it finished. So they turned that around pretty quick.
Had to get the drinks in.
Yeah,
we just got to smash out this report.
Tap,
right.
tap, tap.
Quick whip around. Right. Any highlights? Anyone? What did we do? Not much. The bar open yet?
So there's a few things, nothing too impressive or amazing. The key thing to take away, and probably the one thing of note, was a big increase in the immigration intake. Okay. So that they announced that, and they've been talking about this for a while. So there was no surprise to that. But permanent immigration intake up from 160,000 to 195,000 a year. Wow. Now going forward, yeah.
What's the logic with that number? 195,000. They couldn't go round it up to 200.
I think it's a bit like when you're buying something at shops for $9.95. And you'd be like, oh, yeah, it's under $10. Yeah. It's like, oh, it's 100,000 something.
Yeah. You get 5,000 immigrants cash back.
No, it is, but it is like that. I think, like, it's because it's a big increase. So that's the permanent immigration intake, and then you've got the humanitarian on top of that, which is probably another 20 to 30, and then temporary visa holders and student visa holders. So it ends up being quite a big lift.
So was 160 like down from like as a result of COVID kind of situation, or and we've been tracking at 160 for a while, and this is now quite a big uptick?
Well, we went to zero through COVID. So the 195 or the 160, that's a cap. So it's up to that.
Okay.
But then with COVID, we didn't get anywhere near that. It was zero for a couple of years. So it's a cap in that sense.
Right.
And 195, like that's a big number. It does change around year to year. That's at the high end of the sort of range of the last 20 years. You know, like having that 195, trying to like keep it under 200. Like, the Home Affairs Minister Claire O'Neill said that there is nothing in this room with universal support, but an area where almost everyone agrees is that we need to lift the permanent migration numbers this year. The thing about that is that the last survey I saw said that there was only 6% of Australians wanted to restart immigration at a higher level.
Yeah.
It seems that most of that 6% were at the Jobs and Skills Summit. It's not a popular move. People aren't voters aren't calling for it. It's more coming from the business community.
Is that to help with the employee shortage at the moment? Like, because, it's...
Yeah.
Sort of, we haven't got enough workers?
Yeah, that's the thing. That's what we talk about, this skills shortage. No one can really identify where those skills shortages are. But, this is what we need to bring workers in to help businesses because there's an epic skills shortage. But you look at that, like if I was to say to you, someone coming on a skilled worker visa, how much do you think they have to earn a year to be classified as a skilled worker to get a skilled worker visa?
Oh, I wouldn't even know it would have been based on price.
What's a skilled worker salary?
I thought it would have been skills based. I don't know, maybe 80,000.
Yeah, 53,000.
That's low.
It's low. It's not high, and so it's kind of like, and this is one thing the unions were pushing for. They wanted to increase it, and saying like the skilled migration visa is a way for businesses to bring in workers from overseas rather than paying and competing on local workers. So that necessarily keeps your wages down. So if you're bringing in skilled workers who are earning $54,000 a year, that's keeping the wages down for people with those skills locally. And then that discourages skilling up because you're not going to, they're bringing in accountants who are earning $54,000 a year. So why study accounting? Because, there's no upside to your wages because as soon as there's any wages pressure, they're just going to bring people in overseas to keep the wages down. So that's sort of what the unions were saying that's how and that seems to be by and large how the skilled migration program's used. The ACTU, they wanted to, one of the things they were pushing for at the summit, it didn't get up, but it's still on the table, is they wanted to cap that earning floor to go up to 92,000 a year.
The 53,000? So from 53 to 92?
Yeah, they want it. So saying like if it's genuinely a skilled
position,
vocation, that's really a really rare set of skills that you can't train someone up in Australia to do, and it's a little bit hard to imagine what skill is so rare that you can't give someone with a year or two's worth of training, you can't skill them up. But imagine that there is something such a specific skill set. If it is that specific,
I can think of a few, like surgery.
Yeah, maybe, but like, what's surgery? 3 or 4 years. It's like it's.
I thought you were going to get all like, what surgery? I could do surgery. Anyone, give me a scalpel. Don't even need a scalpel. Actually, just give me that knife over there.
Yeah, but surgery is a good case in point. Like, you're taking about doctors, giving them another, I don't know what it is. Say it's like 6 to 10 years of training.
Yeah.
So the wage should be the signal to a doctor to invest in the training to get to become a surgeon. Right. But it's a short-term tweak to just go like, let's not worry about it. Let's just bring someone in from overseas. And so it means that wages don't act as a signal in the economy the way they should, the way that everything else acts in the economy. Like if there's a shortage of pencils, then pencil suppliers know the price goes up and they can supply more pencils. So yeah, the price sort of, the signal gets diluted there. But yeah, so the ACTU wants to push it up to 92,000. Employer group saying that would wreck the system because 70% of applicants would get knocked out by that 92,000. So we know that
70%, right?
70%. So 70%. The floor is 54. It's very low, but 70% of people coming in on skilled visas are coming in at under 92,000 a year.
Well, cash registers are getting harder to work these days. They're all electronic now. So maybe, I don't know. Maybe you need certain skills to ring the till.
So, I mean, it's interesting. The unions were sort of on board with this, and I think it's coming from, like, particularly with nursing and aged care. Like, there are shortages in those sectors, and that's creating big problems, and people in those sectors are really stressed, and it'll help those people to bring in more workers. But again, the price of that is you suppress the wages. If you're bringing them in at low wage rates, you suppress the wages in that sector.
Yeah, like if you're a nurse and you're getting paid, I don't know what the average salary of a nurse is, but if, let's say it's 80,000 and we start bringing in nurses at 60,000, that's not good for you, because then now business is looking at you going, well, you're an expensive nurse. We could just get a cheaper one.
Yeah, that's right. Yeah, that's how it's working. And really the long-term solution should be, if we need more nurses, we should pay more. The nurses should get more, and we should encourage people to look at nursing as a career and go, oh yeah, nurses get good money, which they deserve because it's hard work. Yeah. And if there's a shortage of nurses, pay nurses more and encourage more people into the field. That's the classical kind of economic argument. The weird thing is that's the free market argument of how that market should work. But we have this intervention, this heavy-handed intervention from the government, kind of seemingly designed to sort of squash wages.
Right. Well, yeah. Maybe you should go to the next Jobs and Skills Summit. I'll see if we can get you a seat. Yeah. Sounds like you got some good ideas.
Yeah. I've got some big ideas.
All right, Thomas, we're going to talk zombies now. What is a zombie company?
Yeah, a zombie is a company that is not earning enough to cover its interest expenses on its debt.
Right.
Yeah, this is one of these things that sort of morphed from being just a vague insult into a specific financial term. So there's two tests that it has, that it's existed for more than 10 years, and that its interest coverage ratio is less than 1, which basically its income before interest and tax isn't enough to pay its interest. Right. Not even the principal, just interest.
Just interest. So why are we talking about him?
So it was interesting. So Christopher Joy at Coolabah Capital put out a report saying he's updated his quantitative zombie detection model.
I like it. This is my kind of economics.
Yeah, right. You're not getting that in your art history podcast.
Quantitative zombie detection model. I like it.
Yeah. I mean, basically just crunches the numbers on all the companies there. But so what he found, that in Australia, 195 companies in the ASX, or 13% of companies on the ASX, are zombies by that definition. Interestingly, that compares with 10% of the American in the New York Stock Exchange and NASDAQ together. 10% of those are zombies. But then he sort of says, like, well, the 10-year rule doesn't make all that much sense.
Right.
Because it's like, if you're a young company and you're not earning enough to pay your debt, you're still in trouble. And not paying that debt, not paying the interest, that's for 3 years in a row. So it's a reasonably high hurdle. It's not that you've just had a bad year. You've had 3 years in a row where you haven't earned enough to pay the interest on your debt.
Yeah, so even though you're a young company, you could still be kind of struggle street for 3 years.
Yeah, if you're 3 years in a row not covering enough to pay interest, you're in trouble.
And if you've ever watched zombie movies, it's the kids that are the scary ones. You see the kid zombies and a little 4-year-old zombie walking around. That's scarier than the adult zombies.
Yeah. No one's scared of grandma zombies.
You just punch grandma right in the face and move on. That kid walking around with a creepy doll trying to bite you on the shin. They're the ones you got to watch.
Yeah. So anyway, he drops the age limit and just says any age company, and then it's 34% of the ASX. So 1 in 3 companies.
Whoa.
Yeah.
So a third of the ASX is classified as a zombie.
Yeah.
That's worrying.
Yes.
Is that a new thing? Is that up or down, or like is this a COVID result? I don't want to try and tie everything back to COVID, but it's been a pretty rock and roll sort of time.
It didn't actually say. I don't know. I think it is up. I think it's up because partly it's an interest rate story. I mean, that's why I'm saying it's worrying that it's already 1 in 3 and interest rates are rising. RBA met yesterday by the time this is coming out, and they've probably hiked rates 50 basis points again. So interest rates are up. So that means that interest expense is rising, and already 1 in 3 companies on the ASX are not earning enough to just to cover interest.
Right.
Yeah.
So how do they live very long, these zombie companies? I mean, how do they survive if they're not, they can't pay their way?
The concept of zombie companies came about with quantitative easing, the first round back after the GFC, and kind of saying like when interest rates are so low, it's easy for zombie companies just to keep kicking along. And really, they should be wound up and their resources should be allocated somewhere else.
I think we talked about, maybe it was very briefly a while ago, about zombie companies, I think in the context of budget rent-a-car.
Oh, yeah.
Back in the early days of COVID or early days of meme stocks or early days of something recently. And I think because they were considered a zombie company.
Yeah, so that's sort of the concept's been around for a while, and it's one of the criticisms of super cheap money is that it keeps these zombie companies going much longer than they should, and that's what Christopher Joy is saying. He's saying like we're moving into this rate hike cycle, and then we could be looking at the first default cycle in Australia since 1991. Like we haven't really had a shakeout of the corporate sector in Australia since 1991, and yeah, we could be looking at a situation that as interest rates rise, more and more of these zombies just can't keep going anymore and fall over.
Right. So what does this mean for the outlook then for the ASX? It's a bit pessimistic.
It's a little
doom and gloom.
Grim. Yeah, it's a bit. I mean, Christopher Joy tends to be a bit on the bearish side, but he's very good. I have a lot of time for him. He's very sharp. Yeah. I mean, the other interesting thing, he breaks it down and saying it's really bipolar, the distribution. So you've got a lot of companies that are zombies or on the edge of being zombies, or you've got companies that are really in a really good position. Saying it kind of looks like there are a lot of deep value stocks and also loads of junk-like growth wannabes. That's how he classifies the ASX. Yeah. But yeah, like I mean, that'll weigh on the indices. Like those deep value companies, they'll be all right. But like if you're looking at it, your ETF and a whole bunch of those start going bust, that's not going to be good for the overall indices. Even
worse, I guess, if those zombie companies start biting the healthy companies. I think that's a signal for me. If someone starts chomping on CommBank, some little neobank just starts. That's a sell signal for me.
I'm out. Going to cash.
All right, let's take a break there. We'll grab a word from our sponsors this week. We'll be back with more Comedian versus Economist right after this. Welcome back. Here on Comedian versus Economist. Don't forget you can catch FinFest happening October 15th. Head to equitymates.com/FinFest for all the details. Thomas and I will be there. It will be a hell of a time, no doubt. Thomas, NFTs. What's going on with NFTs?
Yeah, apparently the trade of NFTs dried up. There's no liquidity in the NFT market anymore. There's DAP radar. I don't know exactly what they do. They compile some data.
Symptomatic of the entire NFT ecosystem. There's this company, we don't know what they do, but they're involved in NFTs somehow. Right.
Yeah. But no, they analyze the data on OpenSea, which is the big NFT marketplace, and saying that transactions volumes are down in dollar values are down 99% in 4 months.
Whoa.
Down from 2.7 billion to just 9.3 million. Yeah, so massive drop in value of transactions on OpenSea. Yeah, users are down by about a third as well. Yeah, and then the NFT prices themselves are tanking as well. Bored Ape Yacht Club's down 53%. CryptoPunks is down 19% from its peak. So yeah, so
Gee, what's his name? Seth Green would be spewing, won't he? He paid all that money. He had it, lost it, bought it, had to pay, would have paid top dollar to get it back. So he's bought it twice.
Right at the high.
And now even if he wants to, he can't sell it. Let's hope his TV show that he makes with it goes well.
Yeah, but you know what's surprising about the collapse of the NFT market?
No.
Nothing. It's just one of these things that just looks dumber and dumber the more you look at it. Like JPEGs of apes, which I get. There's a blockchain based identity system attached to each one, but it's like that doesn't increase the utility of the JPEG by anything. It just makes it kind of seemingly unique. And fundamentally, it's just a fad.
Well, there were those pet rocks as well. I don't know if you saw those.
Yeah.
The pet rocks. You could buy like rock ID number 23 and it was just a different shade of the same rock. It wasn't even the thing that annoyed me about that is it wasn't even a good-looking rock. I don't want to get all vain and start judging rocks like I'm some sort of rock expert. But it's just a picture of a rock, and And then it stopped even being unique among the NFT space because it was just like more of the same rock as different IDs. Like whoever did it was genius. I hope they cashed out and made squillions because that's like the Big Short of the that's the kind of genius at work that takes to do that in the NFT market is just to go, this is ridiculous. I'm going to make like 1,000 rocks and sell them for heaps of money each, even though they're the same thing, and just take money from idiots basically. Other than being able to just pick up like a cheap JPEG monkey now, what else does this mean?
But that's the thing. They're still trading at $110,000 each US each.
Are they though, or are they just listed? It's like when you go on eBay and you want to buy something. You're just trying to, get a feel for how much something's worth, and you check on eBay like, whoa, it's like, this grandfather clock's like $1,000. It's like, no, someone's just asking $1,000 for it. You don't know whether.
Right. OpenSea, to be fair, they're disputing the analysis.
Right.
Yeah, because they say that volume shouldn't be measured in fiat; it should be measured in ETH.
Oh, okay. Oh, right. So
even on that measure, it's still down 62%.
Tis but a scratch.
Well, that's right. They're like, we're in for the long haul. Yes, there's market moves in cycles. All of that. Crypto winter's here. Yeah.
Is it though? Is the crypto winter here?
Well, I think I think people are clinging to the narrative of a crypto winter because it implies a crypto summer.
Well, you got to have crypto spring first. I'm very much looking forward to crypto spring.
Yeah, but there's no guarantee. It could just crash and go to nothing.
What does this NFT story teach us about value and how much things are worth? Anything?
I look at crypto and I look at NFTs, and it's obvious that there's a lot of hype. There's clearly things there, like Dogecoin, for example, parody coin. There's obviously people trading on it, knowing that it's a parody, but like just taking that gamble. I'm buying now, and I'm just going to gamble that it goes up and I'll sell out later. So that's that's a purely speculative trade. And there are NFTs and there are crypto coins that are purely speculatively driven. And I think it just gets increasingly hard to make the argument that, yes, there's all this speculative trade going on in these shit coins and ridiculous NFTs, but over here, there's some fundamental value that, you know, it's like, where's price discovery when you've got Dogecoin doing what it's doing? Like, how do you determine what a Bitcoin is actually worth when is... For now, it's purely a speculative vehicle. You're sort of hoping that it proves its usefulness at some point, but I think, yeah, like, and in that sense, like, any price is rational in my mind. Like, I mean, there's a floor that's set by the mining costs, I guess, for Bitcoin, but which is still well lower than what Bitcoin's currently trading at. But like, until the market, until you have some mechanism of price discovery which leverages off some utility, it's just anyone's guess, I think.
Okay. I did see a website someone created the other day. I think it's called Is El Salvador Down? And it's just tracking how much El Salvador's government is down after buying and treating Bitcoin as trying to use it as a utility, as a currency. They bought tons of it. Right. Well, what to do now then? I guess if there's no Bitcoin and no NFTs, I did see crypto horses. You can buy a crypto horse now. You can race them. So I think that's, for me, that's where I'll be taking. That's where the smart money's heading. I think that's got a real future. All right, Thomas. Finally, Japan wants more people drinking alcohol. What's going on in Japan?
Yeah, this story is all sorts of nuts. Yeah, so the National Tax Agency, so Japan's equivalent of the ATO, have launched a competition trying to solicit ideas about how to boost alcohol sales.
Yes, excellent.
in Japan, yeah. Alcohol. So the tax revenue from alcohol has tanked by 110 billion yen, which is almost 800 million. So almost $1 billion. That's the revenue on alcohol sales is down almost $1 billion in 2020. So that's partly demographics. It's partly, I think, COVID and people being at home, so not drinking at bars where the booze is more expensive, I guess. Yes, there's a big drop in tax revenue coming from alcohol. And so the ATO, so the National Tax Agency's gone, you know what? We need to get people drinking more. So let's start
That's the solution, isn't it?
It is.
We need more taxes. And there's not enough people smoking either.
Yeah.
I think we could maybe free cigarettes at schools. I don't know. Just let's get the kids hooked early. I think that's how we're going to drive tax revenue. I hate this. I don't.
It really is weird. It really is weird.
Like, surely they could come up with something that doesn't rely on causing harm to people. Like, that's not the solution here. Like, it bothers me in, like, I drive past the Glenelg Footy Club here in Adelaide all the time, and you'd be forgiven for thinking it was a casino. Like, out the front, there's just, like, gaming rooms open, 8 a.m. There's, like those road signs, the LED road signs showing, gaming room, new pokie machines. And it's just like I get it. It keeps the price of schnitzels down, right? If you're running like a pensioner dairy out the back, just milking people of their pensions, but like, there's got to be a better business model to creating that kind of that harm, like gambling, smoking, drinking. It's if that's what you're relying on, then the system's broken, surely.
Yeah. No, that's right. I mean, a lot of the logic with like the taxation on cigarettes is that cigarettes have a big health impact that you end up paying for anyway. So you're kind of making smokers pay for their health care in some ways by taxing them at the point of sale, because there's a cost to the health system down the line. And so you want to discourage it, but you're also raising revenue to pay for the healthcare down the line. So this kind of looks at, like, I can imagine like the National Health Agency in Japan's just going like, the ATO's doing what? I'm
sorry, can we have a meeting Just before we go live with the Let's All Drink More campaign, this has got a few concerns from the health department we wouldn't mind just workshopping.
Yeah. The drink driving task force would like a word, did he actually?
I think they might be tackling it at the wrong end. Like the problem, because they're trying to target young people, right? They're like aiming this campaign more worryingly at like, what is it, 20 to 39-year-olds or something?
Yeah. That's you got to be under 39 to enter the competition.
Yeah, that's not the right. I think like it's not that there's not enough young people drinking. I think it's that older people keep dying, presumably from alcohol-related causes. So, you know, maybe if instead of trying to woo young people, they just get like better treatments for the older people, and then maybe start dishing out like free blood transfusions with your next bottle of whiskey. Just keep those people who are already in, keep them sticky.
Customer retention's much cheaper than customer acquisition.
Exactly right. It's simple business.
You should enter this
Even
competition.
I know that.
Yeah. So there's a competition. They want young people to come up with ideas about how to boost sale of alcoholic beverages. Closes on Friday, September the 9th. The winners, there's going to be a gala awards ceremony in Tokyo on November 10th.
Free drinks.
Free drinks. But the tax office is going to support the commercialisation of any ideas that come out of the competition.
The tax office is going to... in the tax office's food and liquor arm.
A slush fund just ready with a bit of venture capital if you've come up with a great idea. It's like,
yeah. I did read too that they particularly want to leverage AI and the metaverse somehow. They didn't say how. They're just like, it'd be great if when you're coming up with ideas on how we can get everyone in the country drinking more, if we can somehow shoehorn AI and the metaverse into your proposal.
AI.
I mean, it makes sense. Everyone can own a bar in the metaverse, so because you won't have any of your typical problems getting to the front of the queue to get your next drink. Everyone gets their own bar. It just becomes very hard to convert data into sake or whatever it is you're drinking. The AI bit, I think, is a bit easier because I don't know what Japan's major search engine is, probably Google, but you could just get the internet searches to return results just relating to drinking instead of whatever you were searching for. So like if you search for like cherry blossoms, you get, did you mean whiskey? I don't know.
It really feels like there was a working group of accountants that were tasked with coming up with strategies for boosting alcohol sales, and they just went, we got nothing. Let's outsource this to some young people.
Yeah.
And something AI, metaverse, something. Let's have a competition. All right, we're done.
Oh man! You know what I'd like to see? I'd like to see more alcohol in sports. I think if we switch out Gatorade for distilled liquor, how good would sumo wrestling be in Japan? Just a couple of the big fellas, both had a skinful before they start. You and I, we've been to Japan. You know, they do that the pre-bout ceremony where it's all very kind of historic.
Well, they throw the salt. It's
salt.
They
throw the salt and
just
mix a bit of lemon and tequila. It's asking for. Oh man! Instead of that, you just replace the ceremony with more of your pub brawl style jibes back and forwards. A bit of what are you looking at, mate? Who you calling fat? What? It's on. Yeah, I got nothing. I got nothing else. That's ridiculous. This is literally the dumbest idea I've heard in weeks, and I hear some pretty dumb ideas in my life. All right, thank you so much for joining us on the show once again. We hope you enjoyed today's episode, and we look forward to your company next time on Comedian vs Economist. Bye for now.
Comedian vs Economist is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Comedian V Economist are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Comedian V Economist acknowledge the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.